Good morning. It's 9:03 a.m. Today's date is 8/13 of 2011. One of the things that we are going to introduce to our new SMF-MMT apprenticeships is the CTN.X relative to the S&P 500. The most important thing is the weighting of the CTN.X. And we can see the kind of names that are in here and the diversification of the names that go in this index. And why was this index so accurate to the S&P 500 reversal? And what were the leaderships that were involved in the CTN.X? These are the names, MMTs. Now, the actual index, which is right here, it's in this video, I'm going to show where the bottom was at 228.13, and this is called the CTN.X, Credit Suisse First Boston Technology Index, and it's above the 100-week simple moving average. But the thing about it is, look at the weekly declining moving averages, look at how they're rolling over, look at how the 10-week is coming there, look at how we bounced off of where the major breakout happened. This is it right here, and it's a weekly chart to the 2011 high. See, it says weekly CTN.X, so it's right there. And that was where it got its knife hook support level, was right here. Okay, up here I have an S&P 500 chart that has come down and hit a major support level, but look at how both reversed at the same time. So in the S&P 500, there's a certain weighting of these stocks that also, outside of the CTN.X weighting, that some of these trade in the S&P 500 now. And Google is in here, and it happens to be in other weightings. S&P 500 stocks are also in this index. Basically, when we were having that top put in here, we had came up for 3 weeks, and this technology was hot during the summer rally. It originally had its weekly tops right here, as we know them. Okay, and this is where we'd never seen another higher high going that way, but rather we have a reversal off of this weekly bar. So what I want to say is that understanding how weekly tops and reversals get put in and what the names are and how they follow the indexes. So there are bear ETFs that went up in value when that was going down in value here. That's this one here. And the comparisons as to understanding what these sector indices are doing in technology, you can see that they're weighted. Some of them are weighted in the S&P, and when this started to reverse here from its 3-week high, volatility up, that's where we have that big reversal in technology at the bottom. That was back in 619. From the long weekly pullback, we had a top, double top weekly reversal, bam, and half weekly bars were being, and weekly moving averages were turning. And as that was all developing, so was it over here on the S&P 500 as well. This one here is going to have significant resistances in the up move. All the buyers came in here on those leadership names on Friday at the bottom, and they did here on the S&P. Both have the same similar type of wick. Look, here's that index, here's the S&P. Look at the bottom-up processes and the bottom-up processes. We spent all last week going through these bottom-up processes. We're going to do several more that are very, very important that follow the same kind of buying activity, and the buying activity in any one of these sector indices or S&P is going to be the leadership names, and that it's the leadership names that create these big, nice weekly reversals, and the buyers were stepping in. The key to trade management, though, is how they go together. And how does a put option work? You could have bought bear ETFs, and you could have bought put options if they have them. If they don't have them, you can buy put options on the leadership names like Apple that we're reversing, and you can peg different type of trades that go with these reversals, and it's the leadership in the CTN.X here. The leadership stocks. Apple had a big correction. Google had a big correction. IBM came down real nice. And then it's bottomed up. And so you got to know what the 3 or 4 good leaders in here that really move it, and you have some good ones. Apple $5.41 range, Google $10.10, IBM $3.50 for a listed stock. Not bad. And what we always look for is where the higher delta price ranges are, and what were the stocks that created this move. IBM, Google, and they were buying those names off the bottom. So Apple off of the bottom for several days in a row. Amazon, let us not forget, 7.35. That contributed to it. So we know what the leaders are here now. Relative, that those same leaders, when they corrected, took it down. And the same leaders coming back in off the bottom. And same thing in the S&P 500. Both are identical reversals. We went through all of this, and it's very important that we cover the sector indices, and you can see the relationship in the names bouncing, so that you have a very defined, broader risk diversified management, long and short. You need to know that when the S&P is going down, the technology is leading the way, and that within the S&P 500 weighting structure is that you've got Apple and you've got Google and you've got IBM and Amazon in there. And the thing about it is, you can see how they move together and how weakness builds. This was a great volatility trade up there now, and we called the weekly reversals in here with you, as well as the S&P not being able to take out its tops. Now we have bottomed up here and bottomed up in technology on Friday. Once again, the feature is going to be this CTN.X relative to its partner, the S&P 500 index, and how to peg them, how to identify them, and then the leadership stocks that are in here. Long and short entries moving forward.